Get your free copy of the complete tutorial at www.teachucomp.com/free.
Before you can issue a paycheck, you must first find the gross amount of pay that the employee should receive for the pay period. The gross pay is the amount of pay earned before any deductions or taxes are removed. This amount may be a set amount for salaried individuals, or it may be an hourly wage for hourly employees. The first step is to calculate any hourly employee's gross wages, including overtime hours. Once you have the correct gross amounts for the employee's paychecks, you can then turn your attention to the taxes that need to be withheld from the employee paychecks. As the employer, you must subtract taxes and other deductions before issuing an employee's paycheck. Some typical paycheck deductions could be things such as federal, state, and local income taxes, the Social Security tax and Medicare tax, and federal and state unemployment. Depending on your company, you may also optionally deduct from pay for employee benefits such as a 401k plan or contributions made to the company's medical or dental plans. Businesses are required by law to withhold specific payroll taxes from employee paychecks, as well as pay taxes based on the company's payroll amounts. The taxes withheld from employee paychecks, which are then paid to the appropriate taxing authority like the federal government, represent a liability to the company's books until the payments are made. The taxes paid only by the business are business expenses. First, we will look at the employee's federal income tax. When you hire an employee, you must first have the employee complete IRS Form W-4, Employees Withholding Allowance Certificate. Form W-4 tells you how many withholding allowances to use when you deduct federal income tax from the employee's pay. Form W-4 includes detailed instructions and a worksheet to help the employee figure his or her correct number of withholding allowances. After the employee completes and signs the Form W-4, you should keep it in your files. This form serves as verification that you are withholding federal income tax according to the employee's instructions. Do not send it to the IRS. Federal income tax must be withheld from employee pay in all states. The withheld money must then periodically be sent to the federal government. In addition, many states also require employers to withhold state income tax. Depending in which state you are located, you may also have to collect a county or city income tax as well. These withheld monies are then forwarded periodically to the taxing authority for payment. To calculate how much federal income tax to withhold from each paycheck, refer to the employee's completed Form W-4 and the methods described in IRS Publication 15, Employer's Tax Guide, and IRS Publication 15A, Employer's Supplemental Tax Guide. You can locate these publications at http://www.irs.gov. For information on collecting state and local taxes, you will need to consult the Treasury departments in your state and/or city to get the figures needed to calculate the necessary withholdings. Having the correct tax rate information for income tax withholding is critical, not only to you, but to your employees as well. The tax rates can change, sometimes more than once a year. If you're calculating payroll taxes yourself, you'll need to make sure to have the most current version of the tax tables so that you report and withhold the correct amounts. It's a good idea to work with an accountant or a tax preparer, as they're generally notified of these changes as soon as they occur and can pass the information on to you. If you deduct the wrong amounts, you will have to adjust your chart of accounts, your employees' paychecks, and possibly have to pay fines as well. Another amount to withhold from employee paychecks is the employee share of Fica tax. Fica stands for Federal Insurance Contributions Act, which is the name of the piece of federal legislation that established the Social Security payroll tax. The Fica tax is based on the total earnings of the employees. As the employer, you are responsible for deducting Fica tax from a set amount of employee salary in a calendar year. This tax is unique in that as the employer, you also pay a matching amount of Fica tax as the amount you withhold from employee paychecks. In addition, you must submit regular deposits of the withheld tax money and file quarterly forms that list the total amounts you withheld from each employee's paycheck. Some taxes are paid entirely by the employer. These include the aforementioned employer portion of Fica and state and federal unemployment taxes. These amounts are paid directly by the company and are not withheld from employee paychecks. For each tax liability you do have to pay, you have to figure the total due based on the gross wages for that period. These taxes are figured as a percent of gross. For example, if the FICA tax is 7.65% of gross wages, you then take the gross wage and multiply it by 0.0765. That is what you owe for the employee portion of FICA. You would also have to pay the same amount as the employer. The IRS Publication 15, Employer's Tax Guide, provides a tax table that shows the federal taxes due for each employee based on their W-4 status and earnings. Unemployment will be based in part on a state multiplier and part on your company's unemployment history. Workers' compensation will depend on the industry code your employees work under, as well as your company's performance. While most accounting software programs allow you to create paychecks while keeping the accounting hidden, it is important to know the types of journal entries that are made when calculating payroll. For example, after calculating paychecks, a journal entry is made to note the payroll expense, the liabilities withheld, and the money spent. In this journal entry, you would debit the gross amount of payroll to a salary expense account. You would then credit each appropriate liability account for the amounts withheld for taxes. So therefore, you would credit the employee income tax payable liability account for the total amount withheld. Likewise, you would credit the FICA tax payable liability account for the total amount of FICA withheld from the payroll. You would also credit any amounts withheld for things such as employee contributions to health insurance, for example. You then credit the cash or payroll checking account for the net amount paid to the employees. That should then balance the debits and credits in the journal entry. As the employer, you must pay the same amount of FICA tax as you withhold from your employees. Most employers must also pay the federal unemployment tax, which is often called FUTA, F-U-T-A, and a state unemployment tax, or SUTA, S-U-T-A. As mentioned before, these taxes are paid entirely by the employer. When making this journal entry for the employer payroll taxes payable, you debit the payroll tax expense account for the total taxes paid by the company for the payroll. You then credit the appropriate liability accounts for the correct amounts. For example, you would credit the FICA tax payable account for the FICA taxes owed. Then you would credit the federal unemployment tax payable account by the amount owed. And finally, you would credit the state unemployment tax payable account by the amount owed. The total credits then should equal the total debits for the entry.
Like what you see? Pick up your free copy of the complete tutorial at www.teachucomp.com/free.